lot of people in sort of pop culture thinking that this could be the end.
Yeah, so well, the dip that you're talking about is actually nothing new for Bitcoin. As far as percentage terms go, if we look at it historically, we've seen these types of pullbacks before.
All right, let's go live. Let's go live with the one and only CEO and founder of Quantum Economics, the lovely and talented Marty Greenspan, the OG in the crypto space since 2012, 2011 is kind of when you got into this thing way back in the day.
March 2013, but I've been a trader since way before that.
March 2013. Hold on, let me make a note of that. March 2013. That's your Bitcoin birthday. March 2013. We'll write that down.
March 21st was when I first posted about it on Facebook.
Really? I love that social media gives us those reminders. March 21st.
Yeah, that's right.
That's fantastic. Well, since we are talking about the king of crypto, why don't we pull up a chart and take a look at where we stand right now on a Tuesday here.
Are we live? I don't
March.
see it in the usual places.
Yeah, it should be live on
I mean,
Facebook.
I see the on air thing here.
Oh, wait a second. Why is it
Facebook,
not?
I haven't seen you in a while.
Oh, okay. Hold on a second. I don't know why it didn't go. Some of these settings are weird. Like something happened, and so I've got to go back and recheck some of the stuff. So QEX, there it is on the yeah. Okay. See if that's working for you now. Let's see. It should be just added to Quantum Economics.
There we go. Now I see it.
Account. Yeah, it's weird, man. Like something again, like settings just get weird. It's crazy. I was talking to Hatter about that the other day, and somehow like my microphone settings as well got like set back to some default random setting that I'm like, wait a second, everything was fine yesterday. I didn't change anything, didn't do anything different, and then I log back in, and then all of a sudden my settings are back to like some default settings, and everything's lower and different. And maybe there's some updates going on that I don't know about. Not sure. Let's talk about the king of cryptocurrency since we started off on that foot, Bitcoin. Right about 69,000, if I'm not mistaken. I'll pull up a chart here as well. I can take a look. You know, and I think the thing, and I kind of said this last night on Monday Night Bitcoin. I think when you look at Bitcoin right now and you lay it against the lens of the geopolitical landscape, or through the lens of the geopolitical landscape, next to all the other drama that we have in the world, basically in World War III, we've got Russia and Ukraine, we've got the US, Israel, Iran, that conflict going on. We're seeing still inflation, not really under control. We're still seeing problems with supply chains. We're still seeing national debt going through the roof. And here's Bitcoin in the midst of this, the most chaotic turmoil in the world that we have, in Bitcoin still holding strong. Really not, you would think under these circumstances, all the naysayers way back in the day would have said, oh, it would go to zero. These are the situations and the circumstances you would think that would make something that was a Ponzi scheme or a scam go to zero. But yet we're seeing it hold up actually better now than gold and silver.
Yeah, I think it's a valid point. Certainly a valid point. I think that, you know, we gotta put things into perspective, I suppose. You know, missile landed this morning in Tel Aviv. It's pretty crazy. I was getting my son ready for school, and we heard, you know, we saw the early alert, and no alarm on our side, so we kind of forgot about it. But then then very loud explosions. It's freaking crazy. And I mean, Tel Aviv's an hour drive away from here, and
you can still hear it.
Oh yeah, you heard it very loud, and it was continuous. It wasn't like sometimes you hear like a big boom, but with those cluster munitions, I mean, it sounds like rumbling thunder. And thank God nobody was killed. I mean, 6 people injured. It took the wall off a building, and this seems to be like a theme or something where there were 2 that got through last week that went the missile defense system. One in Dimona and one in Arad, both cities in the south. And they missed the buildings, but they did take walls off of the buildings in both situations. There were 200 plus people injured.
Beyond the block, now trending. Mark it up.
Sorry.
All good.
That was
And nobody was, but nobody was killed.
yeah.
And this is a miracle. Like, some of these ballistic missiles have 600, 700 kilograms of explosive material, and we're witnessing open miracles every single day here. And we saw when Trump tweeted yesterday, or was it yesterday or the day before? I can't remember.
It was
That
yesterday.
he'd had some successful talks with Iran. I don't know if you saw the Jon Stewart version of that. It was absolutely hilarious. Thing like,
No, I didn't see that.
who the hell did you talk to? Because
Oh,
yeah, I mean, 2 days ago he said that they didn't know who to talk to. Even my friend Matt Miller from Bloomberg tweeted back at me this morning, like, not this morning, I think the other day, said, yeah, well, the guy who we're talking to used to be he used to be parking garages in the Parliament building. He's received quite a promotion. And but even just the Trump tweet of that's this candlestick right there, right? If you see that
oh,
candlestick,
that big green one. Yeah.
that big green one, that was like, suddenly I didn't even know what happened until 10 minutes later. I was looking at, I had the chart up on my screen. I was doing work and building stuff, and all of a sudden I see this huge green candlestick, and I was like, whoa. And then
What? Yeah. What is that?
yeah, and then it was like, oh no, Trump tweeted. And it must have been the middle of the night also for Trump, which was weirder because that was like, I mean, we can look at the exact time, 11 a.m. my time. 11 a.m. my time means it was like 3 a.m. or 4 a.m. in Washington, D.C., Florida. So what was he doing
He likes those early morning tweets.
tweeting at that time of day? I think he was
That's odd.
trying to manipulate the markets, to be honest. I mean, I don't know if I'm allowed to say that or not, but I'm pretty sure
There was
that's
a post yesterday. I saw somebody who basically was front running the markets on that news, made, I believe it was like $80 billion on a trade, just front running that news of and how the markets reacted to that.
I doubt
And
it was
again, that was
$80
on my
billion. Maybe
Again,
80.
it was on my timeline. So we'll see.
You got to look into those things. Not everything on the timeline is real, especially these days.
No,
man.
it's certainly not. It's certainly not. But so the situation yesterday, Trump and Iran, deal or no deal? Feels like we got Howie Mandel coming in to negotiate this thing. So what's the deal? I mean, is there something being brokered or not? I guess is the question. And who is he talking to?
Yeah, and even I saw a follow-up interview. Like, he refused to name the person. He said he doesn't want them to get killed.
Yeah.
But
Yeah. I
let
saw
me
that.
let me explain it right now. Iran is now a chicken with its head cut off. I don't know if you ever seen a chicken with its head cut off. It continues to run around and blood spurting out of its neck, and it just doesn't have any direction. It'll run into a wall or whatever. It doesn't know. The nerves continue to fire. They call it mosaic defense, where there's like 30 some provinces in Iran, and each one has its own commander, and they know that if they're for any reason communication ever stops, they need to continue fighting. But there's no centralized leadership. There's no centralized decision making at this
So
point.
this is the one time when centralization is bad. Generally, we're fans of decentralization, but this sometimes maybe not.
This is the IRGC is essentially using Bitcoin principles, against the rest of the world, and it's not. It's actually like literally the same kind of concept, and they learned this from the Iraq war, right, where Saddam Hussein fell and the country was lost, and so they're like, that's the lesson that they're like, we cannot have centralized leadership, and they decentralized their leadership in that way.
Mm.
But Israel and the United States continue to pound IRGC targets, making dozens of bombing runs every single day, and clearly they're not out of targets yet. And every time they fire missiles at us or any neighboring countries, I mean, they expose their missile launchers, and so that's still happening. That's still playing out. But I thought what was interesting was when Trump tweeted it, that big green candlestick is telling. It
Mhm.
means that the market is craving peace. And I think it, and then, the subsequent volatility was people go like, oh shit, it's just Trump tweeting again. And who the hell is he talking to? And they're just speculating like, is there actually peace coming, or is it just Trump being Trump? And I think, obviously the latter is winning out here. But I mean, essentially, like, I mean, we've got a very important milestone, one that you and I have been looking forward to for damn well over a year now.
I know where you're
Within,
going with this.
within the global economy,
Yeah.
and I mean, we can we can bring up charts. If y'all like charts, we got
We
a few
love
of
the
those.
charts. We
We
love the
got a few of
charts.
those.
Charts are fun.
Yeah.
I saw somebody also on my timeline saying that they are having a party at a hotel in Washington D.C. to commemorate the last meeting for Jay Powell at the Fed. I don't know if it's a real. It was like, get your VIP tickets now. Hosted bar. We're having a party. We're sitting out Jay Fed on his last meeting. So people around the world, one way or another, whether they're having fun with it or not, are highly anticipating this change.
Yeah. So when did Jay Powell come into office?
That would have been Trump appointed him. I'm going to guess, was it like 2016, 2017, right around there? 2016?
Yeah. So 2016. Okay, this is not why is this not, this isn't the chart that I wanted. Oh, that's the one. That's the one that shows the picture. Right? 2008.
Yeah, look at that. Look
The
at that.
Federal Reserve had about 800 or 900 million dollars worth of assets, and this is quantitative easing right here. This was the first instance of quantitative easing in 2008 under the Obama administration, and then this was QE2, this was QE3. They called it QE infinity, where they pumped themselves up to about 4.5 trillion. And this was obviously COVID right here, where they printed more money in a year than they had in the previous 200 years of the United States history. And so we got nearly up to $9 trillion worth of assets on the Federal Reserve balance sheet. And from 2022, May of 2022, they started that unwind. And so this was Jerome Powell's tenure. So this huge inflation, causing inflation, and then fighting the inflation monster that he had himself created. And fighting the inflation monster has been very painful for all of us. And so since 2022 until today, we've had this kind of liquidity suck. And yeah, both in the sense that they're sucking liquidity and the sense that it just sucks. Because markets have been not reacting very positively to that. Bitcoin was able to make headway within that time frame, due in large part to Trump's administration and the appointment and the regulatory clarity that came with it, and institutional adoption, which was certainly underplayed previously. And I would say that the whole FTX collapse was certainly overdone. So if we would say FTX had never collapsed, right, we would have stayed possibly within that range. And then if we put it, when did they start sucking money out of the market? 2022, when you can see it there. No liquidity. That's what happens to the market. But then
Boom.
Bitcoin, yeah. But then Bitcoin managed to have this rally. But it's intensified over the last few months, and I mean you can see that in all areas of the economy. Not to mention AI and all of the headwinds that causes for companies and people, and particularly people who tend to be into Bitcoin, which are understanding technology and understanding finances somewhat at least a rudimentary level, and being comfortable with taking their finances into their own hands, so not sheeple, for example. And so I believe, I'm hoping that the changing of the guard, the new Federal Reserve, will put us in a drastically different monetary regime than we saw under Jerome Powell, and that Kevin Warsh will be absolutely motivated to make the economy explode ahead of the September midterms. I mean, this is the 4 to 5 months sweet spot that we've been looking forward to, and it's coming closer and closer every day. So
we talked about this, I think on one of our prior streams, and I kind of threw it out there that maybe things are aligning where we're going to see the new Fed chair come in right about the same time we get the Clarity Act signed and brought in. And it seems like they're kind of going this way. And we did hear last,
and World War III coming to an end. I mean, it's all going to come at the same time. So yes, I think that for those of you who have dry powder left, keep sitting on it, because your time is about to come. It's not here right now. It's not here today, but it's coming soon.
So if you, but let me walk me through that then. If I have dry powder and I'm sitting on the sidelines right now, I want to wait to deploy that.
Yes.
When the price will go, it's going to only go up, isn't it? So why would I wait to deploy? Wouldn't I want to be deploying capital now under 70,000, 68, 69,000, knowing that it will go up, knowing that it's certainly going to go to 120?
Yeah, now is the time to be positioning for that. I mean,
yeah. Not
say,
financial advice, but
right, because it's always darkest, right before the dawn. I don't know if that's a thing or not, but
it is.
There certainly could be some last minute pain that is required from the market, or suffering that's required from the market, in order to absolutely wash out any holders that are still weak-handed or over leveraged, or both. That is typically known as capitulation phase. And so generally speaking, what we tend to see from bottoming of markets is, this is the classic one, was the crypto winter, if you'll remember it, right? This is a weekly chart where candlestick is 1 week. was, okay, there's the 20K high. We all remember very well. We were all high on 20K. We didn't deserve 20K because it went from 10K to 20K inside of a week and a half. It was not earned.
Yeah, it wasn't
And
sustainable.
right. And so when the 10K to the bottom broke, I mean, that kind of signaled bear market, and we had a prolonged period of winter. And look at what happens here is this is consolidation, and this is getting tighter and tighter and tighter. And then you have this break of support, which is called capitulation. And you can see that kind of here as well. Although, I mean, here that capitulation signaled more downside, a little bit more downside, but eventually kind of a bottoming act. And that tends to happen when bear markets are over. Here's another perfect example of that, right? This is the FTX collapse over here, and then market consolidation on the bottom, capitulation, and then consolidation, and then that huge candlestick up was signaling of, okay, it's over, and we can start going back up again.
So let me ask you then, if we're looking at the most recent timeline, where do we see those patterns forming now, if we can?
So look, I mean, past performance doesn't indicate future results, but if I were to speculate and go with my gut and say, okay, what's the most likely pattern for us to see here, would be continuous consolidation, getting squeezed even more and more between the 65 and 70 range, and squeezing out until late April, early May, with a possible capitulation candlestick. Peter Brandt's 58K still hasn't been touched. Look at where Peter Brandt is at, 58K.
Yeah.
Right. And so he needs that in order to feel whole. And I think that that's when Mike McGlone starts going $2,000, $100. Fucking clown. Yeah, and then after capitulation, when the last weak hands, the last bullish weak hands get flushed out of the market, that's when you see the true market bottom. And then we get Warshin, and then we get, peace on earth, and then we get, at least 4 or 5 months of, positive, extremely positive risk asset behavior. I'm not predicting the future. I'm just speculating here and reading the tea leaves like any other guy. Don't take my financial license as some kind of prediction of the future. I have no idea what's going to happen. It's like anybody else.
Nobody does. One thing that I think is I think one thing that is safe to, you can basically say or even predict, is that over time Bitcoin will go up. I mean, you look at historically at the chart, it's going to continue to go up. And this is a narrative that you and I have talked about, and you, I think, ingrained in me way back in 2018 or 2019 when we were first talking, and that is that this is a long game. You have to take a bigger macro picture and zoom out at this. It's easy to get caught up in 4-hour candles and, a daily candle and all of this kind of stuff. But really, when you zoom out and you put it in the macro picture, this is one of those things. You have to have a long time frame. You have to have some ability to withstand these drawdowns. The volatility is a feature, not a bug. And if you can handle that, then you're going to be in position for a long-term gain that it's going to probably take you some time to get there. And you're probably going to have to endure some bumps along the way. But when you do, it's going to be great.
Yes. I hope you're right. Hope you're right.
Well, I mean,
can I say?
I hope I'm right. I think when I'm looking at the history of the chart, I mean, I feel pretty confident knowing that it's continually gone up. It's had these pullbacks. We know that, but You know, when you started, go back to 2013 when you started, and the folks who were buying Bitcoin then, they were probably thinking, oh, gee, it's going to be great if it gets to 20,000 or even 100K. And that's why, I think we saw a lot of that selling right around that 100K mark. Whales were dumping because back then they got it, you know, however cheap it was in 2013 at that time. You know, we have the chart here. You could pull it up and we could get, you know, specific with it. But I think that's the same thing. Those folks, look how long they waited. From 2013, some of these OG hodlers waiting close to 10, 15 years before they sell, right?
Yeah. Yeah. That's true.
So the idea that it's a get rich quick thing, and I still hear people with this wrong idea and this mindset. They're like, oh, I'm going to get into crypto. I'm going to make money. I want something that's going to pump overnight. And I'm like, you're not going to get that. You're only going to get wrecked. That's how you end up getting wrecked. And pour your life out making bad decisions.
The first time I took a loan from the bank in order to buy Bitcoin was right here. I'll never forget that.
Well, you did okay.
Because, I mean, it was literally at the top. I bought at like 13,000. And I held it in a drawdown. For 17 months underwater. Until it came. I didn't touch it. Until we saw some very bullish action. I was able to pay back that loan in full.
I'm sure you were. I'm sure you were.
It was a good time. Now the bank doesn't want to lend to me because they know I'm going to buy Bitcoin with it.
Let me ask you this. Bitcoin lending has become a bigger and bigger narrative as the asset has grown and matured over the years. What are your thoughts on Bitcoin lending? Have you ever explored the idea of maybe taking a loan out against Bitcoin? If you had, I'm not saying that you do, but what is your thoughts on Bitcoin lending? If you had a stack to lend out, would you do a conservative loan to value and maybe tap an asset like that, or do you think nah?
My Bitcoin's in cold storage, sir. I'm not. No, I've seen the disastrous effects. I mean, I play with it every once in a while. I'll dabble it. I mean, yeah, you get a few positions open, but not more than $100, you know, like just to try out the technology and see what's going on there. I honestly just don't, you know, I don't believe in it right now. I don't believe that that's like worth putting, you know, your wealth into. Bitcoin as a technology makes sense. That's where I keep my wealth. But the layers on top of Bitcoin have never made any sense to me. And
well, for example, like
Celsius, right? Like, let's not forget what happened there. There's people for a measly, you know, 7 or 8% put, you know, lots and lots of money with Celsius, and then lost everything basically. So no, it's not worth it.
Yeah. We had a gentleman come through on Monday Night Bitcoin last night, and he's launching a new Bitcoin lending app and program. And you know, we've interviewed in, you know, between you and myself and Hatter and all the different content that we put out on the various streams in the quantum universe. You know, we've spoken to the folks at some of these various Bitcoin lending companies, whether it's Arch or Lendin or, you know, Unchained. There's a bunch of them out there.
Ledin.
What's that?
Ledin.
Yeah. I think I got their hat right up there. Ledin. Yeah. Up there in the back. Can't see it. But anyways, I think the idea is sound. The idea when we spoke with the team from Arch was buy, borrow, die, right? It was you buy the asset, you borrow against it, and you die holding it, right? You never have to. And what we walked through with them and a couple of the other folks as well was that, you know, let's say you've got a full Bitcoin. And at today's market rate, it's 70,000. You loan it out at, you know, 30% loan to value, right? And you get that back in a stable, and then you hope the market doesn't go below where you have to recapitalize the loan. But then you're able to take that money out, let's say at a conservative loan to value ratio, and then that money's tax free. You don't have to pay taxes on that money because it's a loan, right? So then you're able to take that capital and deploy it however you want, whether that's, you know, to put back into your business, into your startup, to finance something, or maybe even do some projects around the house. However you want to deploy that capital, that's yours. It's tax-free. And what what we were talking about was that, let's say you took out, let's just do easy math, $100,000 Bitcoin, take out 30% loan to value, you get 30 grand. Let's factor in the monthly payment to service that loan is maybe a couple $100. So, say it's $1,200 over the course of the year, $1,500 over the course of the year to service the loan. Take that money back out. Now you're operating with maybe $28,000 that is now tax-free that you can deploy wherever you want. And you're really not at that much risk because you're at a really small loan to value, right? Now you can take it up. Some of these products, they offer up to like 60% loan to value, which I think is a little dangerous. I wouldn't be going that high LTV, but
the main danger here is less about market volatility and it's more about counterparty risk.
Right, exactly. That is, third party counterparty risk.
That's the lesson that people need to learn from Gerald Cotton. Don't keep your, Mount Gox, or they should have learned it in Mount Gox, but then they repeated it with Quadriga CX, and they repeated it with, every, that Japanese exchange that lost $500 million of people's money, and they repeat it over and over and over again. And now the biggest wallets that are holding Bitcoin are all centralized exchanges, and people refuse to learn how to do self-custody. It's like literally Satoshi gave us a gift and we're like, wow, man, that's a pretty box. Like the gift was self-custody, you doofus, not the ticker. The ticker is not the gift.
I think there's got to be a way that we can make this asset class work for us rather than just sit there and do nothing and maybe go up in value as a store of value. That's why I do like the idea of taking a loan out again.
You better watch your mouth, man, because you're getting real blasphemous right over here. I can't hear such nonsense coming out of such a smart person, man. I don't know. What do you mean work for you? It's working for you. It's sitting in Bitcoin. What do you mean? Like this is what fundamentally people get wrong about investments. Always, about every investment. Okay? It is that once your money is in the investment, you don't need to do anything else. You just need to wait. Is the passage of time and the accrual of value. That is literally what investments are. And when the moment you say, but I gotta leverage it, or I gotta do something else, I gotta open a trade, I gotta trade it for a meme coin, or I gotta do something else, I gotta lend it out, that's when you lose.
So
that's when you try to do too much.
Let's say somebody has Bitcoin, they have maybe a couple Bitcoin, and it's sitting there in cold storage, and it's just sitting there, and it's not at $1 million. How do they then? It just sits there. You just got to let it sit there and do nothing. And then at what point? Then the problem is, then you got to sell that Bitcoin. If it hits a certain price target where you want to sell, then you're looking at capital gains, right? So if I have a couple of Bitcoin and I want to sell half a Bitcoin, instead of taking a loan out against it, now I'm losing my Bitcoin, and I'm incurring a cap gains hit. When I could take out that half a Bitcoin, lend it to somebody, and get, at a small loan to value, and get USD back to do whatever I needed to do.
Right, but the reward that you're getting for lending it is not worth the risk that you're willing to take for lending it. It's not. It can't be, because the risk is astronomical. I mean, if you were, to lend your money to the U.S. government, for example, and buy a U.S. Treasury bill, I mean, you can get between 2% and I think probably 3 or 4% at this point, a year. And the reason that it's so low is because the perceived risk of the U.S. government defaulting on its debt is extremely marginal. Now, in my mind, it's a lot higher given what the U.S. owes and the path to doom. I think it's inevitable that the U.S. will default on some debt, but it can roll it over for quite a while, possibly. We'll never really know when the earthquake is coming, but that will stay for another show. Point is, that when you lend it to, when you take your Bitcoin, which is a decentralized asset, right, and a self-custodial asset, and you give up your private keys and you give it to somebody else across the internet who you've never shaken hands before. Maybe you have shaken hands. Maybe he's a really nice guy like Alex Wyszynski or SBF. Maybe they've got a brilliant smile and they talk really well. But you've basically given them your Bitcoin, and they promised you 7 or 8%, right? And now you say, okay, well, let's say I'm owning $100,000 worth of Bitcoin, and now I've got $70,000 that I could do whatever I want with, and and still keep my $100,000 worth of Bitcoin. You're sitting there smiling, right? But your Bitcoin, you didn't realize it, but you've just given it away, $100,000 worth for $70,000. Whether you're going to get your Bitcoin back or not, well, you might not. And that's the risk that you're taking.
Yeah.
And in my mind, the paltry single digits or even a low double digits percentage that you're going to get back is not anywhere near worthwhile compensation. And we're talking about an asset that often does 100% a year. What more do you need than that?
So you're of the mindset.
Why do you think that you would want to risk something that does 100% a year for an additional 7%?
Wait, how does it do 100%? What are you talking about? The CAGR on it? The CAGR is not 100% on Bitcoin a year.
Bitcoin often does triple digits. Often.
I think the charts on the CAGR on the 1 year, it's like 30 or 40%. Pull it up. Over time, it does go up, but I've seen those charts on the CAGR, and it's awesome and it's great, and I think that's kind of been the narrative and why.
By CAGR,
compound annual growth rate, CAGR. Pull up the CAGR.
I learn things from you all the time.
Pull up the CAGR on Bitcoin, and you'll see over the course of time from 1 year through like 10 years.
Yeah, 2017 was 1,000%. 2020 was 300%. 59% in 21, 155% in 23, and 24 was 100.
Let me see. Can you share that?
No.
Share it up on.
Oh, sorry. I'm sorry. I was thought I was sharing. Now, obviously, I'm just looking at the green years here. There are red years in between, right? What are we being stupid about? I mean, we've got AI these days.
Yeah.
Let's be real here.
So to me, it sounds like you're more of the mindset, hold on to your Bitcoin, and then if you need to sell it, sell a portion of it instead of lending it out.
Oh yeah. I don't see any reason to lend it out. I don't. I literally, like, not only is it just so so risky, like there's no, I don't see the reason for it. Like the additional gains that you're going to get are not nearly worth the risk. Bitcoin's average annual return less than 49%. So 49% return is phenomenal. If it continues to do 49% every year, then why would you ever risk that for an additional 7 or 8%?
Then how do you put that asset to work for you if it's just sitting there? You can't tap the value. It's like if you have a house and your house.
No, it's already working.
But you can't tap it though. I can't tap it. It's on paper. If I've got $1 million in Bitcoin right now on paper and it's sitting there in cold storage and I can't use it to.
I'm shocked from what you're saying, Matt. I mean, shocked from. I hope you're playing devil's advocate here.
But if I have $1 million in Bitcoin and it's in cold storage and I want to be able to tap that asset, do I want to sell it, incur cap gains, or do I want to maybe take a loan out against part of it at a small loan to value? Then maybe
What investment, in which investment in the world? Like, do you think of the same way about stocks? Like, well, I'm holding $1 million worth of, worth of Tesla stock. And I really want to use that $1 million in the meantime. So what do I sell the stock? Does that sentence ring to you? Does that make sense to you? Or I mean, am I being silly?
well, no, because a stock is different than something like a commodity or a house or something that goes up in, where you can actually take out that equity, right?
I'm
Just
holding
like I would
15
against
gold
my
bars.
home.
I'm holding 15 gold bars in my safe right now. But I want to tap them in the meantime. I really want to use the cash while I'm holding them in my. What do I just sell them?
It seems like that's the only option that you would
No, you
have.
sit there with them in the gold in the safe. You don't have any other option. That it's working for you, and the fact that it's sitting in your safe.
But if
It
I
is
need to
it is
do
literally
things, if
doing
I
it's
need to do
doing
things in my
it's
life, if I need to
it's the
pay for
it's the Lisa
things,
Simpson. What does it do? Well, whatever it's doing it right now.
but if I need to access that money for things in life, whatever that might be, if I have
Yes.
access to equity that is sitting there that's
Right. But
untapped,
you want to have your cake and eat it too. I get it. Everybody wants to have their cake and eat
sure.
it too, but you can't. It's not possible. You want, once you eat the cake, you don't have it anymore.
I think the thing right now is because Bitcoin lending is still in its infancy, we don't have that trusted type of third party in a sense where, like, if I'm going to take out a mortgage on my house and my house has
Mm,
gone up in value and I've got like
mm,
$650,000 in equity, I can take out and I can tap that equity, right? And boom, and I
yes.
still own the house and I make the payments back. So the same idea and the same concept is being applied to Bitcoin. I've got this Bitcoin, it's sitting here, it's gone up in value. I've got a lot of equity in it, but I don't want to sell it. I want to keep it. Hey, are there options that I can explore to where, okay, and again, this is why I'm very conservative. The most volatile asset class there is, I play it extremely conservative. Maybe the option to take out a loan at a small loan to value at a very conservative risk rate might be something to think about for folks who have some equity built up in digital assets instead of selling it and taking a capital gains hit.
Well, I definitely think that those products should exist, and I think that it makes sense to experiment. I don't think that market
Mm-hmm.
is trustworthy or full.
Oh, you're cutting out. I can't hear.
I said I don't think that there are any in the market today that are trustworthy or that pay nearly enough for the risk that you're taking in today's
Yeah,
environment. And
I
does it
I kind of feel the same way.
make sense to me, given
Yeah.
what the lesson we should have learned over the last few years regarding self custody, not your keys, not your coin, and all of that.
Yeah. Right.
Um,
Yeah.
I got a question from the audience here. Curious, what sectors in AI and crypto are you're most bullish on right now? And
Mm.
well, I am absolutely phenomenally bullish on QE coin. I don't know if you saw the chart on that one over the last few days, and I do not understand why all of these things have to be so intensely correlated. Like, why does the value that we're putting in completely nullified by other market factors? I mean, this makes very little sense to me. Like, it's I literally hear people going, yeah, I'm very bullish on QE, but the whole crypto market is down right now, and so why should I? I don't want to touch it. And I'm like, it makes me want to pound my head into the wall because, um, like the value that we're putting into the coin, the stuff that we're building, you, me, the rest of the team, um, that is absolutely nothing to do with the rest of the crypto market. I mean, and so the fact that coins are not doing well, or meme coins aren't doing well, or there's not, a lot of activity in them. Well, there are some gems that are doing extremely, that have, I think, on the go. I said it the other day on Space, like you can find them every once in a while. Yeah, there are some that are popping here and there. But for me, I mean, like every single day we're adding, new features, we're adding new products, we're seeing new things built on chain, we're adding new customers, we're adding new users, the growth of the network, by the way. And not to like toot my own horn or anything, but like literally we've seen 1.2 thousand customers or visitors on the website just in the last 7 days. And so, I mean, this should technically translate into, value for the coin, right? So since March 14th until today, I mean, we're up sharply. The time on the site is up sharply. The bounce rate is way down, and people are the message is resonating. And so why does that not translate into value for the coin? I'm just, if anybody has an answer, I'd be very happy to hear it, or if anybody thinks they know, definitely happy to. But if you ask me what I'm bullish on in crypto and AI, as Val has asked and opened the door for me, that is it. And that's what I'm continuing to buy QE coin in my own wallets at every opportunity that I have. That should be pretty apparent on the chart as well.
Well, I will piggyback off of that, and I would say, and I mean this sincerely, I'm excited really about RWAs. I love what Quantum Assets has been doing already. I mean, this is again, it's giving me the vibes and the feels of 2016, 2017 when I first got into Bitcoin. This is something that's new. It's exciting. Again, it's tangible. When we talk about a real world asset, something like a piece of property that is going to produce passive income and mineral rights that you can get in on so early. Again, this is the same. Oh my gosh, this is the same freaking opportunity to front run Wall Street and BlackRock like in 2017 with Bitcoin. You can front run them right now in RWAs and tokenization of assets, because Larry Fink has already said it's coming. We're seeing this already happen. Tokenized stocks trading 24/7. But this is something, again, when you're talking about property rights and mineral rights for these properties, this is something that isn't like speculative pie in the sky. Whoa, it's like whatever. This is literally, you can go and touch it. It is dirt. It doesn't get more real than dirt, right? And so when you're able to tokenize that and bring down the barrier of entry for folks every day around the world, folks in, and I'm sure the legal logistics are being worked out, but I think folks like in Kathmandu, folks in Bahrain, folks in Bali, if they want to now have access to something that was generally regarded and excluded for, institutional investors and high net worth individuals. So I'm really excited about the democratization of real world assets and breaking down that barrier. So many more people have access. And I think it's really exciting. So that would be the one where I would put my hat on. RWAs, real world assets, mineral rights.
Absolutely. So I hope that answers your question, Val.
Thanks, Val.
And yeah, I mean, even and look, if people don't have the $250 minimum for that, I mean, at least they can get involved, with QE coin.
Mm-hmm.
Even even $200 right now gets you in the whale club. When we decided on the price of the whale club, so for actually not price implies you have to pay for it, but actually just holding enough coins, in this case, in your wallet, holding 1 million coins gets you access to the whale club. And when we were deciding on the level of coins that you have to hold in order to be part of the whale club, we're like, Yeah, well, at $1 million, it's $1 million market cap, which we were I think we were right about here when we did it.
Mhm.
We're like, okay, so that's $2,000 that you need in order to be part of the whale club, and then at $10 million market cap, well, that's $20,000 that you need, right? So like we're
Mhm.
like, okay, so that makes sense. $20,000, you're a whale. Right now, to be able to get involved with $200, I mean, it's a gift for anybody who's new to quantum economics, sees the potential for the growth, and wants to be involved long term for that. Whenever one of these green candlestick years happens, why is my entire screen not being shared here? Whenever we see
Um, Here we
one
go.
one of these green candlestick years, you know, obviously my anticipation, anyways, and according to the work that we're putting in, is going to have a very large effect on quantum coin. But obviously, I'm biased, and that's not considered financial advice. Um, and for whoever it was that did sell the other day, we caused a red candlestick. I saw that. That was
I saw that.
that was no, but not in that way. Like, yes, but no, because like I don't hold ill will against anybody for doing what they feel that they need to do. You can buy QE, you can sell QE, you could do whatever you want with it. I mean,
Unless you loan your Bitcoin, then you've got a
well,
problem.
you're allowed to do that too. You asked me what I would do, and I told you what I do. I mean, that's
Right.
what you do is up to you. I mean, I've
Yeah.
got my own opinions, and might feel strongly about them. My preferences, obviously, I prefer
Mhm.
that you be buying QE rather than be selling it. But for anybody who does feel the need to sell, that's completely fine. I don't
Mhm.
have a problem with that. Actually, I feel bad for you because you're gonna miss out. um, and that's your decision, I guess. So no, like that, like to whoever that was, we hope that your financial situation changes and then you're able to come back in and join again. And if not, then that's completely fine as well. And
Yeah.
we're here to build long-term value. At the end of the day, that's what this is all about. That's what this whole project is all about. It's um, the growth of the network, and making sure that everything that we build gets into the value is attributed to the right people who've made the appropriate contributions.
Yeah. That's the word, contributions. Well, we are closing in on the top of the hour, so we should probably put a bookmark in this conversation and wind it down and move it over to X, where Matt Hatter and I will be looking forward to having you join us on Trading Tuesdays as we talk not financial advice, but talk about the markets. And how do you trade? How do you make money in a wartime economy like this that we're seeing? What are the best trades? Where's a safe place to hide out? How do you make money? We'll discuss all of that and more coming up here at the top of the hour as we move the conversation over to X. Mr. Greenspan, final comment, thoughts?
I mean, the you know how do you make money in a war? If you're thinking about that now, you probably already missed it. I mean, markets are a forward-looking metric, so what you need to be thinking about now is how am I going to make money when Warsh comes into power and
Mm.
sends and completely sends the market. That's what we should be thinking about. The war is already happening. The prices are. You can see it in gold. And just look at gold. Just look at it, man.
Oh yeah, it came way down,
Where you at?
way down.
Yeah, where you at? There you are, gold. It's a buy the rumor, sell the fact. I mean, people bought all this was on the anticipation of World War III, and now people are like, well, it's a reality, and okay, that's going to be over at some point. Now they're trying to price in peace. Now people aren't trying to price in war; they're trying to price in the peace. I'm trying to price in warsh. So
All right, we'll
just
continue the
think 2 steps
conversation on
ahead.
X. All right, we'll unpack
Thank
all
you
of
very
that
much,
and more
Matt.
in the next couple of minutes. We'll see you soon, Mr.
I
Greenspan.
love you,
Appreciate
man.
it.
We'll see you.
All right,
Bye-bye.
buddy. Take care.
Did he turn that thing off?